Welcome to another deep dive, listeners. Today we're taking a closer look at the Beijing Capital International Airport and how they did in 2023. We've got their annual report right here,
Yeah.
and I gotta say there's a lot more to it than meets the eye.
Oh, absolutely. It's a goldmine of information, really. We get to see how they're bouncing back after the pandemic and all the clever strategies they're using to stay ahead in the aviation game.
Right. So let's dive right in. The report splits their business into two main parts: aeronautical and non-aeronautical. Now, I know what you're probably thinking. Aeronautical, isn't that just like planes and stuff?
Well, yeah, you're not wrong. It's the bread and butter of any airport. All those services that are directly related to aircraft, like landings, takeoffs, handling passengers, all that. But what's really interesting here is the sheer scale of it. They've got 82 airlines operating out of Beijing Capital. 82. Connecting to, get this, 221 destinations. And that's across 49 countries and regions. Talk about a global hub.
That's pretty impressive. And definitely a big bounce back from that travel slump we saw a few years ago. But this non-aeronautical side, this is where things get really interesting to me. It's all the stuff that makes an airport more than just a place to catch a flight, right? You know, shopping, restaurants, those fancy VIP lounges I'll probably never get to see.
You never know. But yeah, you're right. This segment is becoming super important for airports all over the world. And for Beijing Capital, it's not just some extra fluff. Their non-aeronautical revenue actually jumped by almost 62% in 2023.
Hold on, did you say 62%? Wow. Now that's what I call taking off. What's driving that kind of growth? Are people just that excited to be back at airports spending like crazy on souvenirs and expensive coffee?
Well, there's definitely some pent-up travel demand going on, for sure. But the report points out some pretty key strategic initiatives, too. Like, they've been busy revamping their retail areas, bringing in more high-end brands, and those duty-free shops we all love. Plus, it seems they're really good at advertising, taking advantage of all that extra foot traffic.
So it's not just about having shops and restaurants. It's about creating like an experience, almost like a destination in itself.
Exactly. They're tapping into the fact that passengers usually have some time to kill, and they're turning that time into, well, money. And as we'll see when we look at the financials, it's working really well.
Okay, speaking of financials, the report does get into some pretty impressive numbers. The chairman's statement, it really emphasizes their commitment to what they call high-quality development. But what does it actually mean in terms of, the bottom line?
Well, for one thing, their earnings per share did a complete 180, going from a loss in 2022 to a profit of 0.55 RMB per share in 2023. That's a pretty strong sign that their plans are working, right?
Okay, so from red to black, that's definitely a good sign. Anything else that really jumps out at you?
Well, the report gets into the nitty-gritty of their profitability, but one number that really pops is their return on equity, which hit 9.69% in 2023. That tells us they're using their investments really effectively to generate profit. Good news for shareholders.
Now, that 62% growth in non-aeronautical revenue we were talking about, that's got to be playing a big part in these positive numbers, don't you think?
Oh, absolutely. If we break down that non-aeronautical revenue a little further, we see some crazy growth in certain areas. Concession revenue, which includes things like retail and dining, went up by a crazy 107.2%. And the rental income from those same places had a solid increase of 16.1%.
So they're really squeezing every bit of potential out of their assets, turning those airport spaces into moneymakers. I'm starting to see why they're so focused on this high-quality development thing.
It's a smart move for sure. They're diversifying their revenue streams so they're not so dependent on the airline industry, which can be unpredictable. And that stability is key to building shareholder value over the long haul.
And speaking of shareholders, does the report give us any clues about what they're planning for dividends or share buybacks? Those are always good to hear.
Well, they do mention a non-public issuance of shares back in 2019, which boosted the parent company's stake to 58.96%. That suggests to me that they're serious about keeping control and investing in the airport's future.
So playing the long game, huh? But let's face it, no business is perfect. What kind of challenges are they facing?
The report does acknowledge some external factors that could affect their performance, like exchange rate fluctuations and those pesky interest rate hikes we keep hearing about.
Yeah, that's something any business has to worry about, especially a global one like this.
For sure.
Well,
And then there's the constant need to adapt to, changing passenger expectations and those ever-changing market conditions. What travelers want from an airport today is way different from what they wanted just a few years ago.
so how are they tackling these challenges? Are they just crossing their fingers and hoping for the best? Or do they have some concrete plans?
They definitely seem to be taking a proactive approach. The report really highlights their commitment to risk management and strategic planning, which is a good sign. But what really caught my eye was their emphasis on environmental protection and sustainable development.
Now, that's not something you usually hear about with airports. Tell me more about this Green Gateway initiative they keep mentioning.
It's actually pretty impressive. They're doing a whole bunch of things to reduce their carbon footprint, from making their buildings more energy efficient to installing electric vehicle charging stations. They're even looking into using sustainable aviation fuels.
Interesting that they're not just focused on profits, but also thinking about their impact on the environment.
It's a smart move, both ethically and strategically, I think.
Uh,
Sustainability is a big deal for travelers these days, and airports that get on board with that are going to have an advantage in the long run.
Okay, so we've got this picture of an airport that's not just financially solid, but also forward-thinking and environmentally conscious. Before we dive into the details of their financial statements, what's your overall impression so far?
I gotta say, I'm really impressed with their strategic approach. They're not just reacting to what's happening in the market, they're shaping their future, both in terms of growing their business and being sustainable. Other airports could learn a lot from them.
Okay, so let's dig into those numbers and see how all this impressive performance translates to the bottom line. We'll break down those financial statements and get a clearer picture of their overall financial health in part two of this deep dive.
Okay, so let's really get into the numbers here. Let's start with the income statement. This tells us, how much money the airport actually brought in and how much they spent over the year.
Right, and if I remember correctly, their earnings per share went from a loss to a profit in 2023, right?
Yeah, exactly. Quite a turnaround, actually. And looking at the bigger picture, their total revenue for 2023 was a massive 17.4 billion RMB.
17.4 billion. Wow, that's a lot of yuan. So where did all that money come from?
Well, like you'd expect, most of it, about 14.9 billion RMB, came from their aeronautical side, those core operations we talked about. But don't forget that impressive growth in their non-aeronautical revenue, that brought in a hefty 2.4 billion RMB.
There it is again, that non-aero magic. Okay, so they're making a lot of money, but I imagine running an airport can't be cheap. What about their expenses?
Oh, yeah. The costs are definitely significant. Their operating expenses for the year were about 9.6 billion RMB.
9.6 billion. Okay, break that down for me. Where did all that money go?
Well, a big chunk of it went to staff costs, about 561 million RMB. They've got a massive workforce to keep everything running smoothly, from baggage handlers to those helpful folks at the information desks.
Makes sense. Got to keep those employees happy. What else?
Another big expense was depreciation and amortization, which came in at about 300 million RMB.
Depreciation, amortization. Remind me what those are again.
Basically, it's the cost of wear and tear on all the airport's assets over time. You can think of it like this. Every landing and takeoff puts a little bit of stress on those runways. Every passenger wears down the carpets a little more. So these costs are just reflecting that reality.
So it's not just about building the airport, it's about maintaining it too. Makes sense. So I've got big revenues, big expenses. What's the bottom line?
Well, the bottom line is actually very impressive. Their profit before tax was 7.7 billion RMB. And after you factor in income tax, their net profit for the year came in at about 2.4 billion RMB.
So from a loss in 2022 to a healthy profit in 2023, that's a pretty remarkable recovery. But profit is just one piece of the puzzle, right?
Right?
What about their balance sheet? What can we glean from that?
Right. The balance sheet gives us a snapshot of their financial position at a specific point in time.
But
What they own, their assets, what they owe, their liabilities, and what's left over for the shareholders' equity.
All right, let's start with the assets. What do they own?
At the end of 2023, their total assets were 34.7 billion RMB. Most of that, about 31.3 billion RMB, are what we call non-current assets. This includes things like property, plant, and equipment, basically the physical stuff that makes up the airport.
So the runways, the terminals, all of that.
Exactly. And then you have what are called current assets. These are things that can be turned into cash more easily, like short-term investments or money that people owe them. Those totaled about 3.3 billion RMB.
Okay, so that's what they own. But what about the other side, what they owe?
Yeah, so on the liability side, they reported a total of 19.8 billion RMB.
19.8 billion. That's a pretty big number. What makes up most of that?
Similar to their assets, the majority of their liabilities are tied up in what are called non-current liabilities. Obligations that are due more than a year out, things like long-term loans, bonds they've issued, and lease agreements for all that airport space. Those add up to about 9.5 billion RMB.
So they've got some serious long-term debt to manage.
They do. And then you've got the current liabilities. These are things that are due within the year, like bills they have to pay and short-term loans. Those totaled about 10.3 billion RMB.
Okay, so we've got the assets and the liabilities. What about that equity piece? That's what tells us how much the airport is actually worth to its shareholders, right?
You got it. And their total equity at the end of 2023 was 14.8 billion RMB.
So even with all those debts, there's still a good chunk of value there for the shareholders. Not bad. But we have to look beyond just the balance sheet to get the full picture of their financial health, don't we? What about the cash flow statement?
You're absolutely right. The cash flow statement is super important because it tracks how cash is actually moving in and out of the business. It's broken down into three main categories: operating activities, investing activities, and financing activities.
So it's kind of like following the money trail, seeing how they're using their cash in real time.
Exactly. And in 2023, their cash flow from operating activities, that's the money they make from their core business operations, was a very healthy 10 billion RMB.
10 billion. Okay, so they're generating a lot of cash just from running the airport. That's going to be a good sign. What about those other activities?
Well, their investing activities actually resulted in a net cash outflow of about 3.1 billion RMB. And this makes sense because they're investing heavily in upgrading your infrastructure, things like improving those terminals and expanding the runways to handle all the traffic.
So they're putting that cash to work, building for the future. What about the financing activities?
Their financing activities resulted in a net inflow of 2.5 billion RMB, mainly from issuing bonds and taking on some new loans.
So they're using debt to help finance those investments. That's a pretty common strategy, but it does add to their overall debt, right?
True, but it's important to note that they also paid back some of their existing loans during the year.
Okay, so it's kind of a balancing act, taking on new debt while also paying down some of the old debt. What's the key takeaway from the cash flow statement?
The main takeaway is that they're creating a really strong positive cash flow from running the airport, which is always a great sign. They're using some of that cash to invest in future growth, and they're managing their debt in a strategic way.
Okay, that all sounds promising. Now, I always hear financial experts talking about this thing called free cash flow. What is that exactly, and why should we care?
So free cash flow is basically the cash that's left over after a company covers all its operating expenses and its capital expenditures. Those investments in things like property and equipment. So it's the cash they have available to, pay dividends, buy back shares, maybe even pay off some of that debt faster.
I get it. It's like their fun money, the cash they have to play around with or reward their shareholders. So what does their free cash flow look like?
Unfortunately, the report doesn't come right out and say what their free cash flow is. But we can get a rough idea by taking their cash flow from operations and subtracting their capital expenditures.
A little back-of-the-envelope calculation.
Yeah.
I love it. What's your estimate?
Based on the numbers in the report, my estimate is that their free cash flow in 2023 was somewhere around 6.9 billion RMB.
6.9 billion. Wow, that's a lot of free cash flow. So they have a lot of flexibility to do those shareholder-friendly things we talked about, right?
In theory, yeah. But we'll have to wait and see what their actual plans are. The report doesn't really give us any specifics on their dividend or share buyback strategy.
Fair enough. So we've looked at their income statement, their balance sheet, their cash flow statement. We even did a little free cash flow calculation. What's the overall takeaway here? What does all of this mean for the Beijing Capital International Airport moving forward?
Well, I think the numbers tell a pretty positive story. They've bounced back strong from the tough times a few years ago. Their revenue growth is looking good. Profits are healthy. And they've got a strong cash position.
But they're also still dealing with those economic headwinds and shifting passenger expectations we talked about, right?
Yeah, that's true. It will be interesting to see how they navigate all of that in the coming years. But based on what we've seen in this report, I think they're in a great position to keep growing and succeeding.
Okay, so they're in good financial shape. They're taking sustainability seriously. They're focused on innovation. But we shouldn't forget about the human side of things. The report actually spends a decent amount of time talking about their employees and their commitment to creating a positive work environment.
And it doesn't feel like they're just saying that. They're actually taking concrete steps to support their workforce.
Give me some examples. What are they doing?
Well, for one, they've put together a really comprehensive training program to help their employees learn new skills and advance their careers.
So they're investing in their people, not just the infrastructure.
Exactly. They've also got a really solid benefits package. Healthcare, retirement plans, even subsidies to help with things like housing and heating costs. They're really going the extra mile.
It sounds like they're trying to build a culture of caring and support, which is pretty impressive for such a big organization.
That's the feeling I get. And it's not just about their current employees either. They've even got programs in place to support their retired workers, which is pretty amazing.
So they're not just a business, they're a community.
You got it. And that sense of community extends beyond the airport itself. The report highlights their efforts to work with the surrounding community, things like volunteer programs and partnerships with local organizations.
This is starting to sound a bit utopian.
Well, let's not get carried away. But it is nice to see a company that's taking a more holistic approach to business. Thinking about the bottom line, sure, but also thinking about the well-being of their employees, the environment, and the community around them.
Okay, we've covered a lot in this deep dive. We talked about their different business segments, their financial performance, their sustainability efforts, even their approach to employee well-being. What's the big takeaway?
The big takeaway is that the Beijing Capital International Airport is more than just a place to catch a flight. It's a complex and dynamic organization that's playing a vital role in China's economy and in connecting people all over the world. And they're doing it in a way that's responsible, innovative, and yeah, maybe even a little bit heartwarming.
It's a good reminder that businesses can be successful and a force for good in the world at the same time.
Couldn't agree more. And it leads to an interesting question for all of you listening out there. How can businesses in other industries learn from what the Beijing Capital International Airport is doing and try to create a future that's more sustainable and equitable for everyone?
Food for thought for sure. Thanks for joining us on this deep dive into the world of airport finance and, well, everything else. Until next time.